Every good show starts the same way. Someone walks the stage, taps the mic, and asks a question. Can everybody hear this? Well, this is Soundcheck, the monthly audio brief from Rockstar Advisory, and where fintech meets the mission. Each month, this show is going to scan news that matters to credit unions, community financial institutions, and the fintechs that want to work with them. We'll cover what happened, why it matters, and what to do about it. No segment will run longer than a song. I built this practice on a simple thesis. Most fintech partnerships stall not from lack of interest, but a lack of shared context. Soundcheck exists to help build it and bridge it 1 month at a time. So here is what made the set list for August. Open banking is now law, and a consultation deadline lands this month. The real-time rail confirmed its legal framework and its launch window. Canada recorded its first interprovincial credit union merger. Regulators published an AI playbook for financial institutions, and the global money is moving in fewer yet bigger bets. So, are you ready to go? Check 1, check 2. See you soon. The headliner for August is all about open banking becoming law, and the clock sure is ticking. Canada spent the better part of a decade consulting on open banking. Well, that era ended this spring. Bill C-15 received royal assent in April, and it enacted the Consumer-Driven Banking Act, moving the country from legislative debate to implementation. The Bank of Canada now oversees the framework, and it's a shift from earlier plans that placed the file with the Financial Consumer Agency of Canada. The central bank already supervises payment service providers, so the move consolidates data sharing and payments under one roof. But here's the part that demands attention right now. The proposed regulations covering data scope, accreditation, liability, technical standards, and fees remain open for consultation until August the 26th of 26. Well, that deadline falls within days of this very episode. Credit unions and fintechs that want a voice in how accreditation and liability work have a short window to use it. Phase 1 launches with read access, and accredited providers will access deposit, investment, credit, and payment account data with explicit member consent. Members control what they share, with whom, and for how long. When write access comes along, including payment initiation and account switching, followed in a later phase, this will happen probably around mid-2027. Well, that's the signal that we're getting now. Bank of Canada Executive Director Ron Morrow told the Open Banking Expo in March, work ahead is substantial, and the bank will not sacrifice the framework's promise of choice and lower cost for speed. The takeaway for community financial institutions and credit unions is about consent management, data governance, and accreditation readiness. That stops being theoretical this year. And so institutions that map their data flows now will meet this launch standing up. Now sections from The Beat, including real-time rail, which is locking into launch this month. The second rail of Canada's financial rebuild has firmed up this summer. Payments Canada confirmed that the real-time rail bylaw and rules received all necessary approvals, and it will come into force, on October 24th, 2026. The system itself launches in the fourth quarter of 26, and it's going to roll out in stages with universal access targeted for, 2027. The RTR delivers instant data-rich payments around the clock every day of the year. For members, that means money will move in seconds instead of days. But for institutions, it means new fraud surfaces, new liquidity questions, and new expectations from a generation that are raised on instant everything. So it's not going to be an easy balance. The Canadian Credit Union Association's national conference in May put payments modernization at the center of the sector's conversation. Speakers noted payment capability increasingly determines relevance with members, especially the younger ones. Panelists also pointed to collaboration with credit union centrals as the practical path to operational readiness. Well, that framing matters. Individual credit unions do not need to build RTR capability alone, and most actually can't. The system level question is how centrals and service providers and vendors will coordinate so that a member in a small institution gets the same instant experience as a customer of a big bank. Open banking and the RTR launching in the same window, it is not a coincidence. Together, they both rewire the data layer and the money movement layer of Canadian finance. Institutions that plan for them as one transformation and not two projects will spend less and land better. The next beat is all about a historic merger and the consolidation question. April brought a first in the Canadian system. The federal finance minister approved the merger of Saskatchewan-based Innovation Federal Credit Union and Alberta's ABCU Credit Union, effective the 1st. The two organizations call it the first interprovincial credit union merger in Canadian history. The backstory explains the trend. Innovation was watching rural membership growth flatline, and its average member age climbed towards the age of 49. And this is quite common across most parts of rural Canada as we see this trend start to take hold with demographic changes. And rather than expand within the province, members voted to go federal. And Innovation completed that transition in 2023 as Saskatchewan's first federally regulated credit union. And then the ABCU merger followed. Sector leaders are increasingly describing consolidation as a response to structural pressure. Digital banking is expensive to build. Fintech competitors keep raising the experience bar, and regulatory costs keep climbing. CCUA President Jeff Guthrie noted that the younger Canadians say they love credit union values but will not give up their banking app. The 2025 federal budget eased the path for provincial credit unions to join the federal system. And CCUA continues to press for fairer and faster merger reviews. Soundcheck kind of has an opinion on both sides of this one. Scale spreads technology and costs, eliminates duplicative spending, and it can fund modernization. It can also strain local member-owned identity that makes the sector distinct. The honest answer is consolidation solves a cost problem and can create a culture challenge. Institutions on either side of the merger decision really do need to plan for both. Next in the beat has to do with regulators handing the sector an AI playbook. Artificial intelligence has moved from panel topic to policy framework this year. In March, the Office of the Superintendent of Financial Institutions and the Global Risk Institute published the second Financial Industry Forum on AI report, built from 4 workshops with more than 170 participants across banks, insurers, regulators, and consumer advocates. The report introduces the Agile framework, which, if you've been in tech for a while, you're kind of familiar with that. The letters stand for awareness, guardrails, innovation, learning, and ecosystem resiliency. It's not a formal regulatory guidance, but it signals where supervisory expectations are heading. AI strategy integrated across governance, risk, and business functions rather than parked in an innovation lab. The adoption numbers explain the urgency. Earlier, OSFI and FCAC found that AI use among Canadian financial institutions rose roughly 67% between 2019 and 2023, and 70% of institutions expected to use AI models by 2026. The FIFAI 2 report projects AI deployment could add $298 billion in cumulative GDP by 2035. Well, the risk side got equal billing. The report flags that deepfake-enabled fraud, synthetic identities, and agentic AI as fast-moving threats. One figure puts deepfake attack growth at 20-fold over 3 years. For credit unions, the practical read is this. AI readiness is now a governance conversation, not just a tech purchase. And boards that can ask sharp questions about the model risk, the data quality, and vendor AI claims will serve their members better than boards waiting for finished regulation. All right, this next section is the World Feed. And this month it's about the global fintech following the money. On this quick spin of the global dial, fintech startups have raised $28.6 billion worldwide in the first half of 2026. This is up nearly 23% from the same period last year, according to Crunchbase. The catch sits underneath the headline. deal counts have fallen more than 25% to about 1,605 rounds. So investors are writing fewer, much larger checks, concentrated, in AI, financial infrastructure, and enterprise automation. The United States has absorbed roughly $15 billion of that total, with the UK and India next on the list. The longer view looks quite strong in the same way. The Boston Consulting Group and FT Partners 2026 Global FinTech Report found that sector revenues passed $500 billion, growing 22% and more than 4 times faster than incumbent financial institutions. That's 74% of the largest public fintechs now being profitable. Why should a Canadian credit union or a community bank or even a fintech care about venture math? Well, for 2 reasons. First, the vendors pitching community institutions are navigating this exact capital environment. Their funding health will shape the product roadmaps as well as their staying power. So due diligence on a vendor's balance sheet is now the table stakes. They're partnering and putting a lot of trust into that service relationship. And secondly, capital concentration means that surviving fintechs will arrive better funded and more mature, which raises the quality of potential partners for institutions that know how to choose them. Every record has a B-side. Well, at least the vinyl ones. So does every newscast. So we've got 3 quick tracks, kind of like a bulletin board, for the wider world of leadership and business. So the first track is the workplace has a whole new vocabulary this year. Researchers at the leadership firm DDI have flagged job hugging. This is where people cling to roles that they've outgrown because the market feels a bit risky, and also quiet cracking, which is the slow burn cousin of burnout. The word of the year, though, is FOBO. That's with a B, fear of becoming obsolete. And the twist is worth repeating in any place, boardroom or office. Frontline leaders are 3 times more likely than executives to worry about AI. So the people that are closest to the members carry the most anxiety about technology. Leaders who want to make transformation stick should start the AI conversation with the frontline, not in the corner office or the boardroom. Track 2, a humbling number is for every leader who thinks that they read the room very well. Research cited by Psychology Today finds 95% of people believe that they're self-aware, but the actual number lands between 10 and 15%. The other 80 to 85%, you're probably in this audience. It's probably me too. The last track on this little B-side is it comes from SHRM's research, which says that nearly half of chief human resource officers expect that they're going to be managing multi-generational workforces to be a bigger deal in 2026. There's up to 5 generations now sharing one workspace. Somewhere in the middle, by the way, sits Generation X, my cohort, the one that learned banking at the teller window, adopted the app anyway, and translates between everybody else. And I think this is probably the main cohort for this show. But anyway, you can let me know. If you want to know what's going on in community, check the community bulletin board. The community board is going to keep it local and hopefully live. Now, for us here at Rockstar, we have our mission meetups that are continuing over the summer. The first one launched in July. We are going to do it all again on August the 18th and again on September 15th. You can check out the details and register at rockstaradvise.com. Also, we've been busy on the speaking circuit, keeping Rockstar on the road. We've appeared at ACON in Halifax in May, the Canadian Credit Union Association National Conference also in May. We spoke at Vision Africa in a webinar in June, and our dates are filling up the calendar for the fall season. Soundcheck will share them as soon as they're confirmed. Perhaps we can hang out, maybe connect at that level. And one more note before we go to break. A new program is launching this fall. We are so excited, called Working with Fintechs and Tech Partnerships. This is built for the credit unions, and we're going to move from theory to practice. So more details will be coming your way in an upcoming episode, and also check our LinkedIn or our website. And last, I have a standing invitation. So story tips are always welcome. So if you've got something worth talking about, maybe you're solving problems, you've got an interesting story, reach out to me at carrie@rockstaradvise.com, and let's put it in the news audio cast. Well, that is the August Soundcheck, folks. I guess the levels are set for this month. Here's our recap in one quick breath. We have a comment on open banking regulations due before August the 26th. Make sure you watch the real-time rails take force around August the 24th. You can learn from the Innovation and ABCU merger. Make sure you put AI on the board agenda. Check in on the front line before that FOBO sets in, and watch for new fintech partnerships program this fall and learning. So Soundcheck will return in September. Until then, the mic is going to stay a little warm. The mission will stay strong. Soundcheck is a production of Rockstar Advisory in Halifax, Nova Scotia, with your host, Carrie Forbes. See you next month.